Hey everyone, welcome back to Corporate Decoder. Today we're diving into Stifel Financial's latest proxy statement, a document that might sound boring, but actually holds the keys to understanding how this financial giant is run and who's getting paid what. Think of it like a peek behind the curtain of Wall Street, but we'll translate it into something even your grandma could understand. This year, there's a special focus on board changes and executive compensation, so stick around to see where the money's flowing. First things first, what is a proxy statement? It's a document companies send to shareholders before their annual meeting, so everyone knows what's up for a vote. Think of it as a shareholder's manual. This one's definitive, meaning it's the final version, not just a preliminary draft, and Stifel isn't paying a fee to file it, which is pretty standard. The letter from the chairman is pretty standard stuff, but they did mention the passing of a board member, Danny Ludman, and his work helping people returning from incarceration. Now, let's get to what we will cover today. We're talking director elections, executive pay, and auditor ratification. We will break down the important stuff. Let's jump into the company's bragging rights. Stifel had record net revenues of almost $5 billion of money. They also mentioned strong numbers in their wealth management division, specifically asset management revenues being up by 18% and record net revenues for their global wealth management operating segment. They also recruited around 100 financial advisors, and the company's return on common equity, ROC, was 16% and return on tangible common equity, ROC, of 23%, and record net revenues for their global wealth management operating segment. They also recruited around 100 financial advisors, and the company's return on common equity, RCE, of 23%. Stifel has over 9,000 employees all over the world, over 2,300 financial advisors in the United States, and coverage on approximately 2,000 stocks in the market. They get about 2/3 of their revenue from global wealth management and 1/3 from the institutional group, a pretty stable business model. Here's where things get interesting. Over 97% of shareholders approved of the compensation packages for the executives, a clear sign that the big bosses are doing something right, at least in the eyes of the people who own the company. Stifel claims that management and the compensation committee are committed to ongoing communication with shareholders throughout the year and having regular dialogue with their top institutional shareholders. This part shows how Stifel tries to keep everyone happy with its compensation. The plan needs to reflect the company's strategy and boost long-term shareholder value and make sure that people are paid for actually achieving goals. They also compare themselves to other companies in their industry to see if the executives are being paid similar to other companies of similar size. Let's talk about the people in charge. Stifel's board is mainly independent, meaning they don't work for the company. It's a mix of financial experts, tech gurus, and general business masterminds. The board has 11 directors, 82% are independent, and the average year of service is 10 years. Here's a quick snapshot: 6 years, 2 years, 15 years, 2 years, 15 years, 3 years, 28 years, 9 years, 8 years, 15 years, 12 years. That's a pretty varied board, which means they've seen a lot. The proxy also shows a pretty neat chart showing new board members over time, so you can visually see the tenure of continuing directors. Time for the popularity contest, the election of directors. Stifel wants you to vote for each of their nominees, saying they've got the right mix of qualifications and experience to keep the company on track. Adam Berlew, director since 2019, brings decades of expertise in cloud, tech, and telecom market evaluation, marketing, M&A, product management, portfolio management, process development, financial structuring, and talent development. Mariam Brown, director since 2023, brings experience gleaned from leading an organization of over 8,000 employees serving over 21 million natural gas consumers in Southern California, and has 25 years experience in the energy industry across engineering, legal, policy, and regulatory roles. Michael Brown, director since 2010, is a retired executive with financial and accounting expertise. He also brings technology experience to the table. Lisa Carnoy, director since 2023, has substantial capital markets, M&A, and operational experience. She also is known for advising clients and building businesses. Robert Grady, director since 2010, has leadership experience in private equity and broker-dealer segments. Also has government experience. James Kavanagh, director since 2022, is the co-founder and CEO of Worldwide Technology, has translated his drive as a professional soccer player into success in the tech world. Ronald Kruszewski, director since 1997, is the chairman and CEO of Stifel Financial, brings leadership experience and understanding of day-to-day operations. Maura Marcus, director since 2016, brings over 25 years of global experience in banking. David Peacock, director since 2017, brings entrepreneurial, corporate, manufacturing, and marketing expertise. Thomas Weisel, director since 2010, brings entrepreneurial and operational experience in the financial services industry. Michael Zimmerman, director since 2013, brings experience within the financial services industry and his understanding of investment banking. Stifel is actively involving its audit and risk management committees to oversee capital and liquidity management. Shareholders can suggest potential director nominees to the Nominations and Corporate Governance Committee. Now we get to the juicy details. How do they decide who gets paid what? Well, it's a 5-step process. Identify what's important. Look at what other companies are paying. Review the company's and individuals' performance. Make decisions about pay, and then actually hand out the awards. Stifel emphasizes that at-risk compensation, things executives could lose if they don't perform, is a big part of the pay packages for the top dogs. The committee uses something called the Incentive Assessment Framework results, which include non-GAAP net revenue of 4.97 billion cents of $1.01 cents, and a non-GAAP return on common equity of 16%. They measure performance on all these fronts. So that means they're exceeding expectations across the board. Stifel delivered value to shareholders, had new business operating capabilities, controlled expenses, and solidified their position as a premier firm. Assets grew to $40 billion and equity reached $5.7 billion. Stifel is strengthening controls and their culture by ongoing risk management, committing to cybersecurity, investing in their infrastructure, and investing in process improvements. Stifel recognizes the critical importance of building on the strong relationships they maintain with their regulators. So who's making bank? Let's break down the compensation for the top execs. The committee continues to emphasize at-risk compensation in determining the annual incentive compensation of the CEO and the other named executive officers. For 2024, it's estimated that 59% of Ronald Kruszewski's annual compensation is at risk. The committee divides the various elements of compensation described above in key executive compensation is at risk. The committee divides the various elements of compensation described above in key executive compensation is at risk, because it is subject to forfeiture, and compensation that is at risk, because it is subject to forfeiture. Alright, let's look at the numbers. We will use the totals here to simplify and only include 1 year since it can be a bit confusing. Remember that the actual numbers come from the previous years, since they have to be audited. Ronald Kruszewski made $15 million, James Semliak made $8.8 million, James Morrison made $3.888, James Morrison made $3, James Morrison made $3 and Osman Chop made $5 million, James Morrison made $3.9 million. It's also important to note the percent of compensation listed that is at risk, as we mentioned earlier, to made 8.89 times. James Morrison made 3.9 million. It's also important to note the percent of compensation listed that is at risk, as we mentioned earlier, to ensure that management is working in the best interest of the company. Michael Zimmerman's experience within the financial services industry and his understanding of investment banking provide valuable judgment and insights. This background, together with perspectives applied as an independent director and audit committee member of a publicly held company, brings knowledge and a skill set integral to our board. The key pay practices included compensation tied to company and individual performance, encouraging stock ownership, focusing executives on long-term performance, and engaging with shareholders. This list also includes what the company does not do, which can be just as important to know. They don't do excise tax gross-ups, they have no special CIC severance, no employment agreements, no certs, no hedging, and no excessive perquisites. This talks about the performance-based restricted stock units and what their payouts will depend on. They measure total shareholder return relative to peers, diluted EPS, and return on common equity. The numbers for maximum and threshold can be seen in the report. They also use other methods such as restricted stock units, RSUs, restricted stock awards, RSAs, debentures, and restricted cash to make sure the company is in alignment with management. The non-qualified deferred compensation table shows the amounts of executives' deferred earnings in stock and other investments. This is important because it's not immediately paid and can be clawed back. Finally, how does the CEO's pay stack up against the average employee? In 2024, the CEO's total compensation was about $16 million, while the median employee made around $124,000. That's a ratio of 129 to 1. Stifel is saying they did a calculation to make sure they can fairly compare everyone's compensation, and they're being very transparent about it. This report states that all previously mentioned details have been reviewed and found accurate by the committee members, which are David Peacock, Adam Berlew, and Robert Grady. The board recommends you vote for the executive compensation, as they believe everything mentioned here is beneficial for the company. The recommendation is also for you to vote for this item, which is ratification of the appointment of KPMG as the independent auditor of Stifel Financial Corp. For 2024, audit fees were $5.3 million and a total of $6.3 million spent on audit services. Moving on to ownership, Ronald Kruszewski has roughly 1.2 million shares, good for 1.22% of the company, and James Zemliak has roughly 1.1 million shares, good for 1.14% of the company. There is also a listing of anyone who owns over 5% of the company. Now let's step back and look at the big picture. Stifel is clearly a company that's been on a growth spurt, particularly in wealth management. The high approval ratings for executive pay suggest a strong alignment between management and shareholders. The company seems to do acquisitions well and is committed to investing in internal risk controls. However, you may want to check their filings to make sure their net income is keeping up with growth. Thanks for tuning in to this corporate decoder. If you enjoyed this breakdown and want to see more deep dives into the world of corporate finance, don't forget to hit that like button, drop a comment, and subscribe for more insightful content.